This is great, right? A big screen TV or a 4-day cruise. They can cost about the same amount of money. Both seem like exciting and fun choices versus spending the same amount of money on car insurance for a year. But insurance, it's one of the musts, right? So how can you save money here so that you can do more of the things over here? Let's look at some of the ways to save money on your car insurance. Consumer Reports' #1 recommendation for saving money on your car insurance is signing up for driver monitoring. It can save up to $800 a year with some insurance companies. You're letting them track your driving habits, so the trade-off is you're giving up some privacy, much in the same way you do when you use certain smartphone apps. #2, shop around and bundle. You may be able to save hundreds of dollars a year by combining your home and your auto policies. #3, some insurance companies let you take a self-driving course to get a discount. The courses are usually only a few hours, some are even online. #4, if your car is paid off and older, you may want to look at dropping collision and comprehensive service.
As a general rule, when the premium is more than 10% of the car's value, it's time to consider dropping collision and maybe comprehensive coverage too.
Okay. And we say this with a caveat, right? Because the last measure is kind of dicey. Comprehensive coverage is what pays when like a tree branch falls on your car, smashes your window, when your car is broken into. So if you save money by not having it, you need to know that if repairs need to be made, anything that is not a crash is going to come out of your pocket.
So when is that a good thing?
And they said the earmark is if the premium is 10% more than what the car is worth. Okay. That really, it's kind of like a give and kind of take, right? So just save the money yourself, but most people don't save the money, right? Yeah, to make those repairs when stuff like that happens, so you're gonna have to know yourself.
That's a very good point. Yeah. I'd like, because I guess it would depend on the situation.
I always do high deductibles, though lower payments, just because I'd rather do that just in case.
Right, and again, you just need to know that if your deductible is $500 and you increase it to $1,000, it could definitely save you money on your yearly premium. Okay. But that means you're going to be out $1,000 if something happens, right? Yeah. Okay, and so collision coverage is one of the other things that he said you could possibly drop. You don't have to have collision. What collision does is it fixes your car when you're in a crash. You have to have insurance to fix somebody else's car, but maybe you don't have to fix your car, and that's what collision is. Again, it'll lower your premium, but can you afford to fix your car?
I like the thought process too that like if it's an older car, I mean then it's like okay, because I mean once I got rid of my last one and it was like we're just barely they're like offering the minimum tiny little bit. I shouldn't have been on it at that point.
Like I mean if you've got a car that's like worth maybe $1,000,
that was mine.
$1,500. You probably don't want that, right? Because you're just going to be like, we probably would just buy another car if you can do that.
I will say this though, check your car's value now because used car prices are through the roof.
So
your car is worth more than you think it is right now.
That's right, that's right. So you may have a gem that's sitting in your driveway, right? All right, when you want to save money, I just want to say make sure you know what the trade-offs are.